Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. Good morning, everyone, and welcome to a new episode of Chat and Chart. This is the London Session Open, and this is your host, Saif Qaddoura. Hope you had a great weekend. A lot has happened during the weekend, actually, and nothing better than to go through it so that we better prepare for the trading week ahead. So, without further ado, let's get to it. As always, we're going to start with the high impact news calendar, and then we move to the charts to align the fundamental analysis with the technical analysis. Now, before we get to the high impact news, let me start with telling you what happened during the weekend. Now, on Thursday and Friday, what happened was the following. Trump was going to start airstrikes on Iranian infrastructure and power plants and major infrastructure in Iran. And the markets actually responded to that and reacted to that. But a few hours later, he said, we canceled those strikes on Iranian infrastructure. And actually, we're very close to reaching a deal with the Iranian authorities, and we're going to sign anytime during the weekend. Now, Pakistan is mediating, obviously. They've been mediating to stop the war for the past, couple of months. Pardon me. Now, what's happening here is after this announcement that the airstrikes got cancelled, what happened is the following. Gold gained some momentum. The dollar index dropped briefly, and then we saw a surge in the US indices, the stock indices. Now, what's important here is to mention SpaceX. SpaceX went public on Friday. So SpaceX is basically, it's a company of Elon Musk. This company is responsible for three things. Okay, so it has three major verticals that it relies on. The first one is obviously the rockets and the launching rockets and the commercial travel to the space through SpaceX. And then they have another vertical, which is XAI, which was very recently acquired by SpaceX. And then the third one is Starlink, which is it's the black horse of the whole company, because that's the only vertical of the business that is actually making money and generating profits and revenue. So SpaceX as a company is actually losing as a whole company, including the three verticals. But Starlink alone is actually holding the whole company together, because it's the only generating profit vertical of business that they have, or line of business. So what happened is the following. The investors and the markets were very optimistic on what Elon Musk has in mind and his future plans to actually invade the space. And with the help of XAI and Starlink, which eases or makes the connectivity to the space easier, they thought that this could be a one-of-a-kind investment. That's why the company was valuated at $1.77 trillion. So on its very first day of trading, it got valuated at 1.77 trillion. And Elon Musk became the first trillionaire in history with his net worth exceeding $1.1 trillion by the market close on Friday. So all of that, the resolution between or the signing of the agreement of, or sorry, the memorandum of agreement between Iran and the US, which states that the Strait of Hormuz opens right away, aside from the other parts of the deal that they're still talking about, which is the nuclear weapons and the nuclear materials that they have in Iran, which the US asked several times to actually move out of Iran and put it with a neutral third party. Not only that, but also like many things like the ballistic abilities of Iran. All of those were part of one agreement, but then they said, you know what, the Strait of Hormuz blockade is hurting everyone. So let's just agree to open the Strait of Hormuz, both the US and Iran, and then we'll see what we can do about the rest of the issues in the agreement. So this, which is the memorandum of agreement to open the Strait of Hormuz, plus the IPO of, or the initial public offering of SpaceX, both drove markets upwards. Specifically, I'm talking about the stock market and the AI sector and the major US indices. Even the small cap Russell 2000 also gained some gains during the last 2 days of the week, or last 2 days of last week. Pardon me. Okay, so good morning, Raya, good morning, Michelle or Michael, good morning, Meza, good morning, Mwine, good morning, Arif, and thank you, Arif, for asking. I'm good. Hope everyone is doing well. Okay, so basically that's what happened during the weekend. That was a lot. Now, this week is going to be very important because markets were driven during the last couple of days of last week, driven by optimism of like first of all, the resolution or the memorandum of agreement between US and Iran, plus the IPO of SpaceX. So now let's get to the economic calendar, because this week what we have is the major news is going to be Kevin Warsh's first Fed meeting as Fed chair, of course, because this is going to tell the markets, or like guide the markets on the future plans of the Fed, whether they're going to make the monetary policy more restrictive, they're going to raise rates, they're going to I don't know, like restrict the policy in other ways, like reducing their balance sheet or whatever. We're going to see. But the forward guidance and the tone of Kevin Warsh is going to be very important for the markets. That's why this week could be the most important week of 2026. Okay, it either confirms the fears of the markets that like that we've saw in the past couple of months, like higher inflation, some cracks in the jobs market, and very high energy prices. Talking of energy prices, after the memorandum of agreement between US and Iran got announced, we saw the West Texas oil, which is WTI, drop below 85, and as of today, as of now, it's at 79. So imagine how big of a drop that was, just because the markets were expecting or were hopeful that the Strait of Hormuz is going to open and the energy shock and energy supply shock is going to go away. Okay, so let's get to the economic calendar, see what data points we have this week, and then we confirm it and align it with the charts. Okay. Hey, I think in video not real live, but it's live. Yes, it's live. You think I'm AI? What do you think, Raya 491? Okay, so let's get to the economic calendar. We start with Tuesday because Monday we have nothing of high impact, obviously. So we have tomorrow we have the Bank of Japan interest rate decision. They're expected to hike 25 basis points, which could be good for the Japanese yen. And then we have the Reserve Bank of Australia interest rate decision. They're expected to keep rates unchanged because last meeting they hiked 25 basis points. So now they're just going to keep rates as is to watch how inflation responds to those high rates. Okay. Nora, I'm not AI. I'm a real person. Okay, so now we move to Wednesday. So we have two interest rate decisions from Japan and Australia. And then on Wednesday, we have the CPI coming from the UK, which is expected to go higher to 3% in comparison to 2.8%. And we have the CPI coming from Europe, which is expected to become 3.2% in comparison to a previous reading of 3%. And I keep repeating this, but it's very important. Before the war, the Eurozone had an inflation of 1.9. So imagine how much it jumped or how much inflation has jumped during that time because of the war and because of the supply shock or the energy supply shock. Okay. So retail sales in the US, we have the monthly numbers and we have the core retail sales also monthly. They're expected to stay unchanged at 0.5% growth, and the core is expected to slow down to 0.5%. Now, crude oil inventories, we don't have a forecast number, but we have a previous number, which was 7.2 million barrels, a draw of 7.2 million barrels. So this is, I think, the fourth consecutive week of negative draws from the inventories. Why? Because of the blockade of Strait of Hormuz and the energy supply shock caused by the Middle East war. And then we have the interest rate decision coming from the Fed, where the previous is 3.75, the forecast is 3.75, so no change. But why is this very important? Because during this meeting, they're going to decide what's the plan for next meetings. So the markets are now pricing in a 70% chance that the Fed is going to hike rates at least once in 2026, in comparison to their previous view on the interest rates, which was two rate cuts this year. So instead of cutting two times, now markets are expecting the Fed to raise rates or hike rates one time at least in 2026. Okay, so this is going to be very important. So we have the FOMC statement. This is going to have all the details. And actually, Kevin Walsh, when he goes to the press conference, is going to read the statement and then answer questions. And we have the FOMC economic projections, which is also referred to as the dot plot. So that's a table or a chart that has dots on it. Okay, so each dot is the expectation of each Fed member of where the interest rates are going to be in like 1 year time, 2 years time, 3 years, 4 years, and longer. So depending on that dot plot, if we see that next year's interest rates are going to be around 3.7 or 3.9% or 4% as an average, we're going to see some bullishness on the DXY because markets are now expecting, and even pardon me, and even the Fed members themselves are seeing higher interest rates. So this is very important as well. And then we have the press conference in which we're going to be watching closely how Kevin Walsh talks about everything and how his tone would be. Okay. Meza saying, Raya, ask complicated questions, he will answer which no way I can answer, and you will believe he is a real person. Okay. So, yeah, good idea, Meza. All right. So, and welcome back, by the way. Meza has been gone for a while. She was on a vacation. Okay, now we're back to Thursday. Thursday we also have the Swiss National Bank interest rate decision coming from Switzerland. The previous is 0%. The forecast is no change. They're not going to hike. They're not going to cut. By the way, the Swiss National Bank was the first central bank in the world to win the battle against inflation, the battle of inflation that was caused by COVID, if you remember. So I think they won in 2024. They got to their inflation target and they started cutting rates, and now their economy is stable. So that's why being like this stable and having such a stable economy makes the Swiss franc actually a safe haven. So not only gold, not only silver, not only the dollar, but also the Swiss franc is considered to be a safe haven if someone or the investors are worried about the overall situation in the world and they want some stability in their portfolios. Good morning, Mr. Breva. Okay, so no change from Swiss National Bank. Then we have the Bank of England interest rate decision, which is expected to stay unchanged as well at 3.75. Now, the Bank of England is identical. The interest rates in the Bank of England are identical to the ones in the Fed. Okay. Uh, um, we're going to see what I think all central banks now, Bank of England, ECB, the Fed, Australian Central Bank, which is the Reserve Bank of Australia, Swiss National Bank, all of them are going to be data dependent, and they're going to to watch what this Middle East war is going to do to their economies. Obviously, no one is going to cut rates. That's for sure. No one is going to cut rates, but they're being very careful because if they raise rates, this might hurt their growth, their economic growth. That's why they're very careful with it. So they're all of them, like if you hear any central banker or any governor of any central bank speak, you're going to hear this word: data dependent. They're going to stay data dependent, and depending on the data that comes out, they move. They do not anticipate and they do not move ahead of time. That's why we call this period as cautious period with central bankers. And then we have the Philadelphia Fed Manufacturing Index, which is expected to jump like significantly from minus 0.4% to 11.4%. If this comes in as expected, this is very bullish for the dollar. If not, it's going to be, if it comes in lower than the forecast, this would make no change or maybe a little bit downside on the DXY. And finally, on Thursday, we have the initial jobless claims, which is expected to improve slightly and go lower by 4,000 jobless claims from 229,000 to 225,000 jobless claims. So for a while, the initial jobless claims, data point or number, was in a downtrend. 2 weeks ago, it started to reverse that trend, and this is the first sign that the jobs market is starting to suffer from the economic conditions and the monetary policy and the whole thing. Okay. What are your expectations on war ended? Which direction we can expect on gold move? Okay. Now, if the war ends, I expect gold to go up. And why? Because that would drive the US dollar down, because the markets were expecting that inflation is going to be very high. So obviously, we're going to keep rates high on the dollar, which makes it more attractive than gold because it's a non-yielding asset. So what happens there? Dollar becomes stronger and gold becomes weaker if the war continues. But what's going to happen if the war ends? The exact opposite. The markets are going to start pricing in lower interest rates in the future, which makes the dollar less attractive, which drives people to gold. But this is a very important point I'm going to add here. Remember the Fed interest rate decision that we just discussed on Wednesday? This is going to make all the difference. Why? Because the war like has been going for a while now, almost 4 months. So 4 months of war is not child's play. It's going to it already affected prices. It's already affected inflation numbers, and it already affected economies. So if Kevin Moore sees that the economy is harmed beyond repair in the short term, I'm talking, he's going to raise rates anyway. So even if the war ends and Kevin Moore sees that we're going to be more restrictive in our monetary policy, this is going to keep the US dollar going up and the gold going down. Okay. And by the way, this is not the end of the war. They just signed a memorandum of agreement to open the Strait of Hormuz, not to end the war. Okay. What do you think about the USD JPY analysis? Which analysis? We're going, if you're referring to the charts, I'm going to move to the charts in a bit. And we're going to discuss that. Could you remind me the date of the Swiss are planning to decide on capping their population and if that could affect the currency market? The date, I'm not sure, but is that going to affect the currency market? Not really. This is going to affect, it might actually, but in the very long term, because um, going there, and by the way, why would they cap their population? I'm not aware of that, to be honest. But let's say they are capping their population because they actually need more people. It's not like they have too many people. No, it's the exact opposite. So I think if they're going to cap their population, it obviously going to affect the currency market, but not in the short term, because like it takes time to actually reproduce and like see the effect of the constrictions or the restrictions on reproduction. So this will take time. This is not a very like it's macro. You can call it like it goes under the macroeconomics, but it's very mild in the short term. You're not just giving us another week, but the whole year. Appreciate it. You are welcome, Arif. Okay, so now let's move to Friday. We have a holiday in the US, which is Juneteenth. Um, so the US markets are going to be closed on Friday, but other markets are not going to be closed. So, yeah, that's that. We're done with the economic calendar. I'm going to move to the charts now. One second. Swiss population cap. Let me see what you're talking about. Okay. Okay, so there was a referendum, Moine, to like actually the government asked the people if they're going like if they agree on a population cap, but it got rejected. Like remember the referendum that happened in UK to do the Brexit, and people voted that they want to go out of the European Union. That's the exact thing happening. There was a referendum that do you want to have a population cap, and the referendum and the people said no, we don't want. So yeah, Switzerland on Sunday rejected a proposal to cap its population at 10 million as voters prioritize economic stability and ties with what? Ties with what? And ties with the European Union over worries immigration was stretching public services and pushing up rents. So yeah, that was just a proposal and it got rejected. So yeah. Okay, let me stop sharing this. So we move to the charts. Okay. Here are the charts. As always, people in the backstage, please don't trying to. Thank you. Okay, so we have this happening now on the DXY. Let's start with the monthly as always. Okay, So yeah, on the monthly, we broke above, but we haven't closed yet above this level, which is 100, 100.3. I have an alert here at 100.7. If this breaks and we close above, we're going, and this is very likely to happen this week after the Kevin Walsh meeting and the Fed meeting. So if that happens, this is very bullish for the DXY in terms of technicals. The weekly chart. Okay, it's still very like it closed a very shy bearish candle last week. We opened on a gap down because of what did I say? The resolution between US and Iran. So what does that cause the DXY? It causes it to drop. Okay. So that's why we saw this gap down. We move to the daily. We're still bullish. Nothing to worry about. Actually, we opened the gap and we hit the 20-day moving average, and it is expected to continue trending upwards. If not, if it decides to like correct deeper, we might swipe this low or sweep this low, sorry, uh, reach the 98.5, so $1 from here, and then we continue going upwards. But like we're going to wait and see what happens in reality, because it's very hard to know that this is the low or not. Okay, so this actually on the 4 hours, it looks much more bullish than the daily because it got rejected from the 126-day moving average, which is my favorite moving average. If you take a look, you're going to see a rejection here, a rejection here, a rejection here. It's very important. This level is the most important actually in the uh, or between the moving averages. Okay. So DXY as of now is still bullish. Let me check if we have a divergence. We do. So that's totally normal here. Totally normal. Okay. Now, if we're going to take this divergence into consideration, we're going to expect to see a drop to a 98.5, but that's not necessary at all. We could just continue going up from here. So the hourly, okay, we have the behavior looks as if it's going to go up from here. So we'll need to wait and see. Now it's time to move to euro, which is the exact opposite of the XY. Okay, the monthly broke this level, which was very important, which is 1.15, and then this is the most important level, which is 1.14. If it breaks, we'll see more negativity on the euro. Okay, the weekly also like closed a very small bullish candle, but it's still under most of the moving averages. So 1.1650 would be a good place to try and sell Euro USD, and targeting 1.14, 1.1450 would be a good. So that's a 200 pip trade. And on the weekly, you can clearly see this, which is what? The divergence. Look how higher this high is than this, and look how lower it is on the MACD. So that's divergence, and it shows negativity. So on the weekly, we're still negative. Let's go to the daily. Okay, the daily, we're still okay. If we want to like go higher, as I said, 1.1650 would be a great place to place a sell trade with your stops around here. So if you want an important, okay, so 1.1665 and your stop loss is at 1.1865 or 60, and you can target this level, which is a 1 to 7. If you want to be more reasonable, you can go to 1.12, which would be the lower band of this channel. Okay, but that's just for position traders and long-term traders. Okay, the 4 hours. Okay, so people who have been watching me for a while remember this level, this zone, the green rectangle. Okay, so we broke below and we're retesting from the outside, from the downside actually. So this might just continue to drop from here. It does not need to go all the way up to 1.1650, as I said. So it's the exact opposite of dollar. So if the dollar goes down to 98.5, this goes up to 1.1650, 1.1660. But if it doesn't, if the DXY goes up from here, this is going to start dropping from here as well. Hi, Abhishek, you are welcome. Okay, now we move to cable, which is GBP USD. All right. So yeah, it's still negative on the monthly, slightly positive on the weekly, but not so much. It's like basically it's ranging. Look, let's go to the daily. Okay, so on the daily, it just retested this cluster of moving averages. Okay. It failed to break below this. So if it breaks above this, this might be very bullish. So I would actually sell around 1.3465 with stops above 1.3512, but I wouldn't hold it for a long time. So this is the level and this is the stop, and I would target this low here. So that's a 1 to 4, not bad at all. Okay, I'm going to keep this for me to look at later on. 4 hours, yeah, 4 hours looks actually nice. It got rejected from the 200-day moving average. Like, even though like those are close highs, but they're lower highs. So this high is lower than this, and this high is lower than this, and this high is lower than this. They're close by, but they're actually lower highs, which indicates weakness. All right, so that's it for GBP. Now let's move to USD JPY. As I said previously, the 156 would be a great place to buy from, which is here, the trend line. And we actually saw USD JPY gain this momentum and reach 160.5 or 0.6. And it failed to break this high that it made before the government intervention. So it got to here, made an engulfing candle on the daily, and it is expected to maybe move lower to 185, 158. Sorry, 158. Too many numbers. Too many numbers. Okay, so if it decides to drop, and because like the Japanese are going to raise their interest rates tomorrow, okay, they're going to hike rates by 25 basis points. Plus, if the dollar or the DXY decides to go to 98.5, as per our analysis earlier, this would easily move to 158 yens per $1. Okay. Then we move to 4 hours. Yeah, same view. And plus, if you look at the 4 hours, you're going to see a very obvious divergence in price and in the MACD. So this is a higher high than this, but this is a lower high than this, which shows that momentum is losing steam at this point. Okay. Then where are we going now? Let's check Bitcoin. Bitcoin got rejected from the same level that it got rejected from the last time, but it broke below. It got to 59 in comparison to this. Now, I think like Bitcoin is going to keep dropping until like we're going to see 50K on Bitcoin, I believe. So it might continue to reach the 68, 69, and then it continues to drop. So we might be looking at a period of corrections on the the whole market, the Bitcoin, Ethereum, cryptocurrencies, FX, gold, silver, oil, the whole thing. Okay, so it's good to be aware of that to avoid just like swimming against the stream. Okay, now I need to take a look at silver. Just give me a second. Did we break this low? No, we didn't break this low, which was 61.6. We did not break this low, but I'm still expecting to see lower lows on this. If not, this is going to just fly from here. It's going to just like continue to go upwards. If we project this into the future, we're going to see this 140 on silver, which could be a very, very, very good trade. Another way to check where the price is going is by using Fibonacci extensions. So the first target would be 107, the second target would be 135, and the third 163, and the fourth is at 180. But I would like I always take the middle. I don't want to keep holding until it reaches there, because at this point it becomes overbought and becomes very vulnerable to surprises. Okay, so any disappointment that could happen would send price dropping like crazy. So that's why I always take my profit in the middle ground. You got me? I'm looking for a better price to invest in Bitcoin, waiting from 3 months till October 2026, I think. So you'll get better price. Yeah. I agree, Mesa. I think gold is gonna go down one last time before going up, as we expected. Fed rate and figure out dollar, yeah, right? Yeah. For now, we're expecting, but you never know, like, because like we don't know what this guy has to say, which is um, Kevin Walsh. We don't know what he has to say. Maybe he's influenced by Trump, and he's going to God knows what, like cut rates. So you never bet on what should happen. You just wait and see and react accordingly. Okay. Silver and gold are in sync movement since last year. Yes. So let's take a look at gold now, because I don't want to be very like hung up on my analysis that I don't see the that gold is actually going to continue going up from here. Like my analysis says that we were dropping to 3600, between 3600 and 3800, but I don't want to stay fixated on that number, because that's actually like a cognitive bias I want to stay away from. So whenever I see an actual reversal, or like if it checks all the list that it's reversing to the upside, I'm going to go in. I'm not going to just like stay fixated on this and miss this whole move. Okay, but till now it's still doing well. It still can reach this level, which is 4400, and then drop to 3600. At the end of the day, nothing moves in the markets. Nothing moves as a straight line. So this was a huge drop from 4600 to 41 to 4 no actually to 4000. So that's a $600 drop. So even if we go like 60% from that, that's going to be what? That's going to be $400. So from 4000 to 4400 is actually 60% retracement, which is around this area, around which coincides with the 20-day moving average, the 200-day moving average, and it actually is still below the 4500, which is a very important level, and it's like it held the gold for a while from dropping. So we're still below 3500. We're still below the 200-day moving average, the 20-day moving average. We're still in a downtrend. and the Fibonacci level, which is 61.8, also coincides with all of this, which confirms that, yeah, anywhere around 300, 4,400, 4,380, something, it's a good place to sell. So that's why, what am I going to do? I'm going to place an alert because I want to stay alerted. Okay. So once we reach that level, I'm going to be looking for cells targeting those levels, which are 3,800 and 3,600. But what happens if it breaks above and closes above this level, which is like the 126-day moving average? If it closes above here, I'm going to wait for a correction to retest this trend line from the outside. I'm going to buy and go up. Okay, so that's why I started with saying that I want to be fixated on like on a certain level that might never happen. Okay, but knowing myself and my analysis, usually I get those right, especially because it's long term analysis, so it's easier to actually predict than intraday movements. So historically, like if I want to trust my history or historical performance, um, gold should be moving towards 3,800 and 3,600, confirmed by the analysis I just conducted here. We're still below moving averages, below trend lines. We're still correcting because we moved $600 to the downside. It's very normal to see a $400 correction to the upside, which is 60% of that move, which is also considered a Fibonacci number. Okay. Okay. According to you, October 5th is most important day for Bitcoin. Not according to me, according to time cycles. Now, according to time cycles, October 5th, 2026 is going to be the bottom of Bitcoin. Why? Because for the past 12 years, each bullish movement took 1,064 days, and each correction in that movement actually took 364 days. And it's been repeating for the past 12 years. So now we got to the high of Bitcoin. Last high was on October 2025. So if you project 364 days into the future from this high, you get October 5th as the low. So it's very important to keep that in mind. But like, I would definitely not go all in because now we have different players playing the Bitcoin game, which are the institutions. Now we have very big institutions, very big funds trading Bitcoin and investing in Bitcoin. So this might change a lot of things. In the past, the miners had the upper hand in determining the supply of Bitcoin. But nowadays, after 85% of Bitcoin has been already mined, what's going to happen is those big institutions have the upper hand now. Why? Because they invest and they are heavily involved in the crypto market. So their involvement might actually break this pattern and might actually break this time pattern. Okay, so be very careful. That was just a video to show an observation. It did not mean that you need to go and buy blindly on October 5th. Okay. So gold last liquidity on 3,884, sweeping that would be good. That would be great, but I doubt that it's going to stop at 3,884, to be honest. You're welcome, Mesa. Okay, so we answered everything. Let's take a look at one more thing regarding gold. If we move to this area, which is 4,400, yeah. So we might go to 3,800 straight away, and 3800 would be a great place for me to start buying actually. So even if it never reaches 3600, if it does, I would be very happy. But if it doesn't, I'm going to buy it here anyway at 3800. Okay, what else to do? Let's check the Nasdaq. Obviously, this rebound was because of SpaceX and because of the resolution between US and Iran. Okay, same as the S&P 500 and the Dow Jones. Dow Jones is almost at an all-time high. It's 50 pips away or 50 points away from being at an all-time high. So this whole drop was just a scare for the markets. But let me remind you of one thing. We have the Fed interest rate decision this week, which can change everything. Okay. And since we have a live stream on Thursday, I have a live stream on Thursday with Rosa and Rajdeep. We're going to discuss this after the fact. So I'm going to see what Kevin Walsh has to say, and I'm going to summarize it for you guys. So make sure to watch Thursday's live stream. It's very important. It's going to be very important. Okay. So yeah, I guess that's it for this time. I guess this is it for this session. I hope you enjoyed it. I know I did. We had some great questions and we had some great interaction. Thank you very much for watching. Thank you for tuning in. And thank you for your great questions as always. Take care of yourselves and I'll see you on the next one. Good luck trading, guys. Bye-bye.